Hey traders, welcome to the equity watch list for August. Starting with the FANG stocks, we're going to run through what the big boys are doing, and then we're going to run through some decent looking opportunities that we have in some of the individual equities. So starting with Facebook, starting on this lower level in this 4-hour chart, we're looking at what looks to me like a fairly decent impulse to the upside and what looks to me now to be a bit of a correction that we're going through at the moment. So using the 4-hour MACD, we can see that what we're looking at is this A wave to the upside or to the downside. I suspect all of this is going to be part of the B wave, which will eventually complete, and down the road we're going to have what looks like a running flat C wave. So I'm looking at this as an initial impulse of the B wave, and then we go into this choppy section here, which I would say is the central pattern of the B wave, and then we have this really high jump gapping up towards that 256 level. I think this is all part of the C of B wave. So measuring this as our A of B going into the choppiness of the B wave, we have an upside target at the moment of around about 270. Obviously potential to go higher, but generally speaking, 270 looks to be the target. And then we would look for this continuation to the downside, a bit of a choppier version of this wave down towards this kind of 230, 240 region. We are looking for this wave to be a bit choppier than this one up and a little bit choppier than this one on the way down, which will give us the extension in time that we need for all of this to be considered a running flat correction of the right degree for the next move higher. Looking about something along those lines moving forward. Obviously, it's really early days. We need to see how things play out here, but that's what I'm speculating the picture to be at the moment. Obviously, we have a little bit of price action in here, which for now, I'm just considering as a lower degree correction for this impulse to the upside. If that is the case, we're looking for this to just kind of be range bound for the rest of the remainder of the month, and looking for upside targets upon completion. We're looking at minimum 300 upside target of around about 320 or 340 full target. So those are interesting levels, because if we zoom out to the higher time frames and we take a look, what we're looking at is the upside targets of the higher degree move to be in that same region of this 310, 320, around about that area. So basically this month looks like we're going to be in the sideways motion, sideways correction, a little bit up, a little bit of a C wave to the downside, potentially a trade to the downside there from around about 270 down to 235, decent looking pullback, and you want to buy this to the upside. Obviously it's early days. We need to make sure that this B wave is playing out as we think it is, and we need to see a nice extension of this correction into our time zone of late September before we see upside. Moving on to Apple. Apple's really come a long way without much of a correction, and zooming out to the lower time frames, we see that the preceding impulse matches everything we need to see this as the secondary continuation impulse of this entire price structure. We have the alternation that we're looking for. This first impulse is a bit more long and drawn out. We go into a fairly decent running flat correction, and then we push higher from around about 210 all the way up to almost 450, where we're currently sitting at 440 is where we're at the moment, and all of that is an extended wave of that impulse. Going into the lower time frame, say the dailies, we see that we've just had basically a straight line up, a little bit of segmentation, but looking at the MACD, there's been zero crossover, and it's just been a straight line up for basically 100% move. It's 110% at the moment. So moving forward, we really need to see one of two things. There's obviously going to be a stock split moving forward. Apparently that's a 4-to-1 stock split, which is going to affect the chart and make it difficult to trade. But either in terms of the stock split, we're going to see a long drawn out sideways correction following that without much movement, or we're going to start a impulse down, a change in price structure, basically impulse correction, and an impulse to the downside. So right now, Apple seems like a really terrible place to be buying. That being said, we might just go full bubble mode, head up to around about 600, go straight into that parabolic rise that we've been seeing in a lot of assets these days due to basically Fed intervention. And this could go really parabolic. But right now, it's at a very dangerous level. We've got some really sizable gaps over this last extension higher. And it's really just a very dangerous place to be buying Apple, in my opinion. Moving on to Netflix. Netflix is a bit of a strange picture because we need to look at this as either a complex correction, which means we need to see this wave to the downside to follow, which looks like we're kind of getting that, or it is that previous picture of a triangle correction for continuation to the upside. Both cases, Netflix is looking really overbought at this region. As you can see, we've touched on the 0.786 of the previous impulse, and we've pulled back quite strongly. So we really need to be wary of what we're looking at moving forward. I would like to potentially look to get short Netflix if we can see a decent looking correction on, say, the 4-hour or hour time frame, something along these lines. If we start to see this kind of price action moving forward, kind of towards the end of the month, I would be looking to get short Netflix for continuation to the downside. Obviously, we'd have to look at this as the first impulse, and our minimum target level would be around about 434. So if you're shorting it at about 500, got a fairly decent trade to the downside for around about 13-14%. Obviously, if you go to full target, that's 20% decline in Netflix. That's a great looking trade in my book and worth the risk of the short. So keep an eye on this, how it develops, but this is a good looking short as well. Google, looking at the levels of the previous impulse before this big correction, we have touched on the right, basically the minimum region of that correction. That being said, if we take a look at the length of this correction, this flat pattern wasn't really enough to justify the size of it for this to be the following impulse. So we really have to take a look at what we're looking at. Obviously, we could look at this as an expanding, and if that's the case, we still haven't quite gotten to where we want to be. So Google's a little bit of a strange picture at the moment. Obviously, a lot of the equities are looking overbought, especially tech. Tech's not a great place to be in my book for the longs, because you're really just relying on Fed stimulus to drive it higher. There's no real good fundamentals behind these moves. As you can see, if we look on the MACD, we're looking at a double top basically with some MACD divergence and a dying off of momentum in this region. So very difficult to justify a long. So basically, my playbook for now for tech is to see a pullback, see a decent looking correction on the lower time frames, and look to trade that to the downside. I remain a tech bull at this stage. I think we're going to be seeing some cycling out of tech into defensive stocks, into cyclicals, and tech's going to be either moving sideways or seeing a deeper pullback. Moving into some of the lower or less known equities, it's just a simple, really zigzag type correction pattern here. It's a simple structure that we're looking at on Abbott Labs, where we have a really nice straightforward line from the highs to the lows of around about $40, and we've gone into a nice drawn out correction, which gives us scope to really look for some long entries on the lower time frames. And zooming in, you see what we have is this really drawn out, choppy, corrective looking run, which signifies to me there's potential here to find a fairly decent entry for a long trade. So I would basically buy any tests of this lower bound channel for an upside move. I'd keep the risk reward fairly tight, I would keep your risk management really tight. But if we can see a move up to the full target, there's still a long way to go. So just keep an eye for a decent looking corrective structure in here to trade to the upside, because it gives you at least a 3-to-1 risk reward to the full target. Obviously, you'd have to be really defensive with your risk management at the 0.618 region, but the structure is just a really clean one and should provide for a decent climb in price for Abbott. Moving on to Adobe, another big stock and another one we need to be wary of in this region. If we take a look at the lows of our impulse, we are sitting on the 1-to-1 region of the following impulse, and a very parabolic move, to say the least. Going into the lower time frames, we see what we're looking at is a bit of a pullback and some corrective price action. So depending what we see here, we're going to be looking to trade in either direction. If we're calling this the highs, which is very possible, then what we're looking at is a bit more of a corrective price action in this region, potentially a wave down to match this one, and then a further push higher. And all of this could look to develop into more complex kind of running flat correction for further downside. It's obviously early days. We need to see how things play out a little bit here. Potentially what we've done here is seen enough of a move. I just don't like this as a B wave. But if we start to see some real downside and get a smaller, lower time frame correction, that's worth shorting, in my opinion, given the extent of the highs we're at the moment. So keep an eye on the structure that begins to form here. If we start to see the opposite, where we see a decent pullback here in terms of this wave, and we get a push higher in terms of this wave, then this can start to look like a decent ABC correction. That would be the end of your B wave. Then there's a potential trade to the short side as a temporary trade and a short-term trade, and then a nice long trade following a really decent ABC correction. So basically a tale of two stories. I like both. If we can get the structure on the short side, I like a short trade. Right now we're setting up for a fairly decent long trade, because this looks to be quite a choppy wave. This could be the central B wave. We'll see a central flat pattern in the middle, and all of this will develop into a complex flat pattern B wave before a C wave, and then continuation to the upside. So keep an eye on that as well. Advanced Micro Devices continues to surprise to the upside. As you know, we were looking for this long previously, and it's more than delivered. We've climbed way past our minimum, and we're actually sitting on our full extended wave at the moment. So if we can start to see anything that resembles a pullback, then we would definitely want to get short Advanced Micro Devices from this level. It would also be a short-term pullback, because after that we would want to see a long trade at around about the 60 region for continuation to the upside. As you can see, without a change of time zone or time frame, you can see this is just a really clean running flat structure of a really big size for continuation to the upside. So lower degree, we're looking for a bit of a pullback. We're looking for a loss of momentum, potentially starting to see it with some MACD divergence here. And we'd want to see a nice pullback and a decent corrective structure to ensure what we're looking at is the start of a downside move, start of the high degree C wave, and then trade that to the short side. So keep an eye on this one. Obviously, we are betting against some really high momentum, but there's good potential for the downside trade. Heading on to Amazon, which, should be up here with the fangs, is some really interesting price structure. It looks to me like we're just forming a more drawn out correction for more upside. That being said, the downside picture is still in play here, because we have a fairly decent pullback. Then we go into very impulsive waves. All of this could be developing into, say, a triangle because of the impulsive waves, or we're looking at a more complex drawn out correction. So give this one time to develop. Potentially what I would look to consider is a continued pullback either from this region, from a new high, or really from here down to here. That would be your central B wave pattern. And then from there, we would have to see a continuation of the C wave of this A wave, and then potential continuation to the downside. It's hard to say now, very speculative, but what we are looking at is some very corrective price action. Obviously, we can't ignore a potential triangle A, B, C, D, E, and continuation to the upside, but it's very hard to justify a long at these levels as well, given the moves we've seen in Amazon on the higher time frames. So if you are going to get long, you really need to keep your risk management nice and tight. As you can see, it's another one of those stocks that has just gone vertical following a running flat correction. If you're going to measure the previous impulse, even then we're sitting at the full target. So very risky to be long at these regions. So you really need to wait for very clean price structures to allow you to justify a long trade. Moving on to Boeing. Boeing's played out really nicely for us. As you know, we've been looking to get short Boeing, and that short did apply. It did come through for us from around about this 180 region. We were calling for the short, and we traded it down to this 160 odd. I think that's where 155 is where we were. What we're looking at now is a pop higher to kind of complete our running flat correction before more downside steps in. An important line to look at is where we're sitting now, which is this trend line, if we can call it that. We don't really use trend lines, but it's an important area, and it is sitting on our minimum target level, just short of our minimum target level. So keep an eye for a turn here. Otherwise, we definitely want to look for a turn at around about 190 for another re-entry to the short side. And that should be a really nice trade. That has potential to go all the way to test the bottoms at 89. So definitely worth taking. Alibaba, higher time frames, also looking fairly heavy if we break down the current price structure of what we're looking at. It does look a lot like this is an impulse to the downside. We've had this B wave type structure, and we're now looking for the C wave to the downside to complete the current running flat that we're looking at, ABC correction. It's a bit of a complex move in the middle here. There's potential for a triangle in here as well, but it's just something to be wary of moving forward. Going into the lower time frames, you need to have a look at some of the price structure we're getting at the moment. It looks very corrective for maybe continuation to the upside, but we would need to see a break of these highs to really confirm that. That being said, even if we do see a continuation to the upside, I would have to see a nice strong pullback down towards 240 before getting long Alibaba, because that would confirm a more decent price structure. So ideally, you'd want to see a break of the highs at 268, pull back towards 240, and that gives you a decent long entry. And you would have to really just trail your stop going up, because we're not quite sure where we're headed from here. But at some point, we want to see a downside trade, a short trade from this region of around about 40%. So a really nice looking downside trade moving forward if we can find the entry. Bank of America, really interesting chart. Really confusing as to where we headed. If you go into the really long time frames, you can see it looks to me like what we're looking at is the B wave of this wave, or at least the corrective structure of this impulse for more downside. So that's something to be wary of. Just taking a look at the lower time frames, this has been a bit of a mess for us so far. Really difficult to kind of allocate exactly what's happening within this region. But on the lower time frames, we are looking for a potential short-term trade, which could turn into a much bigger long-term trade. So what we have is a strong impulse down and a fairly decent corrective structure in here. Potentially, all of this is going to develop into a much more drawn-out corrective structure, which works for us fine, because what we would see is a push lower into this region, and then another push higher to give us our C wave, and then we'd want to trade that to the downside. So giving it some time to see how this plays out in the beginning sections of the month, we might see this develop into a really nice structure to be trading within, firstly in the short term, and then in the longer term to trade this impulse to the downside. So keep an eye on this, see how it develops, could give us some good entries towards the end of the month. Looking at Beyond Meat, there's a nice shorter term trade in Beyond Meat given the current structure. Getting rid of some of these arrows, we'll see what we're looking at, what we're looking to trade is this initial impulse from the highs, and we go into a bit of a corrective structure that looks to be near completion. We have what looks like this A wave to the upside. We then go into a nice, very choppy B wave, exactly what we're looking for. Then we get a fairly decent C wave to the upside, which allows us to draw in our trend lines for a potential running flat in this region, which gives us good scope that looking to get short Beyond Meat is a fairly decent trade moving forward. We've had a big gap down and we've gone into a little bit of a correction in this region. So if you can find a decent corrective structure within here, the trade to the short side should be a good one. It should give you pretty good risk reward. Kind of trading back down to $100 seems like the logical level. Kind of closing this gap in this region is the logical trade moving forward. So short Beyond Meat, nice short-term trade. Cisco Systems, as you can see straight away, you can see a really decent looking structure in this region. This B wave is an absolute mess, but if we can start to clarify what we're looking at here, find the right wave counts, we might be able to draw out a potential C wave trade to the downside. Regardless of that, if we miss that trade, it's fine. Potentially we're going to go up and break these highs and only then see the C wave. Then we know what we're looking at is a potential long trade down the road from around about this 40 region, because it's a nice long drawn out correction with a high momentum nature if we can break those highs and a push higher from there. So potential to get long at that 44 region and trade it higher. Going into the higher time frames, we can start to picture what the upside target will look like, and this is what makes this trade so attractive. We've got that long drawn out correction, and we've got a potential upside minimum 53 with potential to get as high as 60. So a really good opportunity towards the middle end of the month in Cisco Systems to get long at around about 40. Delta Airlines following Boeing, similar structure, and it's really neatened itself up over the last few days. As you can see, we have this impulse to the upside. We go into this long, choppy, drawn-out B wave with really nice structure within it, and we're looking to see a push higher up towards that 30 level before trading the short down. Similar to Boeing, our downside target is not only from this impulse down, which would give us a kind of minimum 23, maximum 20, or full target of 20, we also have a potential to go and break these lows, given that this all looks like a corrective structure of this impulse. So this is a really good looking trade at around about 30. If we can get short delta in the next few days, seeing how things perform over the next week, short delta at around about 30. So that's definitely something you want to have on your radar and something I'll be putting on my watch list. DuPont, we've been raging about DuPont for a while now, just reminding you of where we're at on the long-term structure. A wave is back down from 2007, 2009, really big A wave. We have a really clean B wave with a nice running flat in the middle, and we've just completed what looks like a very long drawn out C wave. Perfect structure on the higher time frame. which means potentially starting another higher time frame structure, which means we need to look for those long trades. Currently, structure's looking pretty good. We're just waiting for this to play out. There's no real trading happening within these lower degree moves. What we're really looking for is this move to the downside, this C wave to the downside, to get long at around about the 48 region, $50, somewhere around there, depending where this structure completes. So we'll be keeping an eye on this one. If you want to trade it short, there's a potential short from 58 down to 48, but we need to be careful about this and see where it plays out to be. Obviously, where we're at in the B wave is a bit confusing. It's a really long drawn out chop. Calling it an expanding triangle for now, but it's not a very broad or expanding triangle at that. So we need to give this some time to play out, but basically we're keeping an eye on potential long entries in this region. So keep an eye on that one. EA Sports, higher time frame, the structure remains in place. We have this really strong impulse down. We've had this impulse correction, impulse up. We're just waiting to see or find the top of this structure to get short for a really nice move to the downside. As you know, there's no wave to correspond with this one, so very good chance we're going to see a corresponding C wave to the downside moving forward. Lower time frame, we thought we might have been looking at a potential short entry in this region, but it just turned into a bit of an expanding flat for continuation to the upside. As you can see, we've really got some MACD divergence heading up into this region. So dying off of a momentum, all we go looking for now is a turn in price and a potential entry point to get into the short side for a nice long drawn out move to the downside. So this is one to keep on our longer term watch list. GDX, as we know, gold just continues to ravage higher, but we still have this structure that we're looking at on GDX, which means we need to see a decent pullback on GDX. Basically below this 38 region is what we're looking for. So keep an eye on that. Lower time frames, as you can see, we're starting to see some divergence on the MACD, especially on the 4 hour. The hourly is starting to show a little bit of a MACD divergence if we can see some downside here. Zooming in, there's a potential flag trade here for us if you feel like being risky. Obviously, we're trading against some really high momentum in gold, some really high momentum in GDX, so it's a high risk trade. But if you can get in with a narrow stop, you can get a really nice at least 5-6 to 1 risk reward on this one. Ideally, though, what we're looking at is the long trade moving forward once this complete correction pattern plays out. As you can see, what we're looking at is this is your initial impulse. We've gone into a nice long drawn out running flat, and if we see a pullback towards the 37 region, we have an upside target of 50, potentially 58 down the line. So really nice long trade if we can see that pullback in GDX. Goldman Sachs, looking at the higher time frames, still fairly messy chart, but it looks to me that what we're looking at here is a complete corrective structure, which means we could see some potential upside on Goldman Sachs moving forward. So it's all about looking for those long entries. As you can see, we had this impulse down, went into this big choppy zigzag correction, followed by another impulse down, crossing our minimum target level to complete the C wave. If that is the case, then we're looking for some long entries. And what we've gotten so far is what can be considered a nice long choppy impulse to the upside. And now we've gone into this corrective pattern. So I'm keeping an eye on this to develop into a nice long correction. And if that is the case, heading into the end of the month, we could see a potential long trade from this region with a really nice risk reward to it given the length of the preceding impulse. So keep an eye on this one. We'll draw in our minimum correction line. That's the only time this really makes sense to trade to the upside. If this continues to play this way, maybe turns into a triangle towards the end of the month, then you definitely want to look for a long entry moving forward. Upside targets, Goldman Sachs, at least for this move, would be around about 260 to 280. That being said, keeping in mind the high degree structure, we could definitely see new highs at 276 and continuation beyond that. So Goldman Sachs long trade down the line, looking good. Halliburton. Considering what oil's doing, we have a potentially really good looking trade on Halliburton. Going into the higher time frames, this is one of our defensive plays we're looking at that looks really good to us. As you can see, it looks like we've come out of a really messy flat pattern correction for continuation to the upside. Even if it is just a messy trade and we don't want to look at the higher time frames because there's no real clean picture for us, we're still trading this impulse to the upside. We're going into a really nice flat correction and potential upside of 24, minimum 20. So depending on how this plays out towards the end of the month, maybe beginning of September, we could see some really nice looking trades on Halliburton. Oil definitely playing ball with us here. Oil is giving us a great correction, which you can find in the monthly FX and commodities breakdown. Home Depot, lower degree time frame, looking at a decent short entry, still kind of tracking the S&P, but we haven't had this pullback that we're looking for to complete this ABC correction. Looks like we're looking at some double top with some dying out momentum. Going into the hourlies, we'll see some, definitely looking at some MACD divergence and potentially one more test of the highs to break this top. It looks like that's what it wants to do, and then a move to the downside. A set and forget entry order could be this one. It's a bit risky though, so keep an eye on it, but potentially good looking short. Following this, looking like a nice long because of the running flat structure that is being portrayed to us at the moment. Biotech remains a really nice trade, and this trade is really starting to play out in our favor by the looks of things. So this is one we've flagged before, looking at the higher time frames. Great looking structure. Impulse to the downside, choppy, impulsive A of B. You go into a really clean B wave corrective structure, then a really nice alternated impulse to the upside. We touch on the right target levels for that move, a little bit above full target. And then going into lower time frames, it looks like we get a really nice impulse from the highs on the lower degree time frames. We get a really clean impulse from the downside. We're now looking at this corrective structure. It really looks like it's played out nicely, and there's a potentially a trade to the downside right here as we speak. Flag entry to the downside. Conservative entry, given the size of the potential move down, risk reward available, entry order at 132 to the short side definitely works. Zooming back out to the higher time frames with a potential move down to full targets of 91, minimum targets 112. That's still definitely a nice looking trade. So keep an eye on this one for one of our longer drawn out short trades that is really playing ball at the moment. So keep an eye on this to get short. That's definitely going to be on my watch list. Johnson & Johnson. High time frame, not much. As you can see, we completed this, call it a complex correction, I guess, complex flat pattern. We had a strong impulse up, and we've gone into a bit of a correction in this region. So we want to see if any of this starts to look like a decent corrective pattern to continuation trade to the upside. So for now, we can look at this as our A wave. We started to see some alternation in the B wave. We started to see some choppiness that we like. If we can see this push up to around about this 160 region, there's a really nice looking short down to 130 and a really nice looking long moving forward, 135, depending obviously how high we go. So some really good looking trades towards the end of the month, although we might not see this happen in August, just something to keep an eye on moving forward. Lockheed Martin, there's a trade we flagged a while back. It's played out really nicely for us. We've had this really strong impulse off the lows and going into lower time frames. It looks like we've gone into a bit of a corrective phase, potentially just completed a zigzag correction and are pushing higher from here. So if you can look for any decent size or decent looking corrections to get into, not too bad at the moment. If you want to really trade this lower degree flag with a wider stop, that could work for you. Ideally, you should have been in this trade already from around about 355. You should be up a fair amount and should be looking to trade this up to around about 424. Microsoft been a real pain. Looked like we were really starting to get that downside momentum that we were looking for. We had the right structure. We had an impulse down. We went into a flat pattern, but we hit that danger area where we see this impulse. We go into correction, and then we see that secondary impulse down, and it just dies out at that full target for this all to just be a zigzag correction. And from there, we just popped higher to break the highs. That being said, higher time frames still suggest that big sell-off that we're looking for. We're still looking at this as a really nice short trade to the downside. It's just a matter of finding the right entry. Potentially what we saw now was a jump up to be the highs of Microsoft for the move to the downside. As you know, looking at the targets, we haven't quite reached the full target of the B-wave correction, but we're in that region where we're looking to get short. So if you got burned on this short, you got burned, so be it. The price is still there to trade to the short side because of the amount of moves to the downside we can get. Right now, we've had this impulse from the downside, and it looks like we have a little bit of a flag or corrective pattern forming here. Given that we have this huge gap here, it gives us a good indication that getting short in this region is not such a bad idea. Worst case, it comes break these lows and continues to the upside, or closes the gap and then continues to the upside, then you can get your break even potentially. The downside potential, obviously, really, really good. If you go to the higher time frame, zoom out, get the higher overview effect picture, and you know what we're looking at is a potential move as low as 160, which is just a great risk-reward trade to the downside. So not giving up on our Microsoft short, just taking a small loss. If you got stopped out, maybe your stop was wide enough to stay in, but that downside move is still on the cards. MasterCard, higher degree correction, looking really good for a short trade at some point. Nothing really right now, but looking at this as an ABC, looking at this as the A of B wave, we go into this running flat central pattern. We want to see a push higher up towards minimum 336, max or full target 370, and then we'll be looking for this move to the downside. Similar to EA, a little bit down the road, but really nice looking trade towards the end of the month. So keep an eye on MasterCard. Mattel remains one of my favorites in the long run, not to trade, but really just to invest. If we really zoom out, it really matches that that DuPont longer term price structure, plus the fact that we're looking at a potential cycle out of tech into stocks like Mattel, into stocks like DuPont. So really clean structure. I really like the structure on the higher time frames. So it's all about finding a really good entry on the lower time frames. Zooming into the hourlies, we'll see we had a push higher, went into a choppy correction, pushed higher again, went into another choppy correction. So basically, you want to just keep buying these corrections, hopefully get a decent size one moving forward. What we're looking at now is potentially one of those decent size corrections. As you can see, we've had a nice push lower. We went into what looks like a potential choppy B wave. Potentially, we see another move down to give us a central running flat. Then hopefully get a nice push higher, and all of that is your B wave of a higher degree structure. Obviously, very early days, very speculative, but if we do see this, this becomes a great buy at around about 1050. Obviously, this is something you want to buy and hold. Upside target, I would say, is new highs at around about 50. So worth holding on to for the long run, seeing how things play out with Mattel moving forward. So definitely one for the investment book. Moderna, absolute mess. You know, these guys are full of crap, and the chart continues to move sideways, but it's setting up for a really good looking trade to the downside. looking at the structure, we had this A wave to the downside. We went into a really nice choppy B wave, and then we had a strong impulse from the highs, which could be the start of our C wave down. What that means is we're looking at this area for a decent correction. I'm looking at this as a lower degree A wave. I'm looking to get some choppy corrective price action to the downside, which it looks like we're getting at the moment. See a chop down towards 65, see another push higher, and then short this from this 80 to 85 region because there's a really nice looking potential trade. Minimum target isn't great, but given the nature of the business, given the fact that it's basically based on lies and bullshit, you can basically bet your bottom dollar that there's going to drop down to at least full target, potentially turn into a expanding at around about 30. So if you can find the right entry, there's a really good risk reward for you given the current structure that's playing out, given what's on the cards of this business. Moving on to Northrop Grumman, really nice looking structure. We're looking for this trade to the short side. We're looking for this momentum of this C of B wave to die out so we can trade this down to 262. So keep an eye on this one. As you can see, not much to explain, very clean structure. Just heading into the hourlies, we're just looking for a die-off in momentum, starting to see some MACD divergence. If we can start to see a turn and a decent entry, definitely something you'd want to take to the downside. Riot was something we were looking at for a potential trade, but as you can see, we've had this massive surge up and some massive gaps, just a really volatile trade, really difficult to see what we're looking at. Zooming out, I was looking to trade this as a flat pattern, potential continuation. It's turned into a real mess. Potentially, this is just a triangle for more upside. It does look to be the case given the size of the impulse and the preceding impulse. So taking Riot off the list, but it was a decent looking setup to start with. No trade available. Square, longer term, Square has always been a great trade. It's really had a really clean chart, and it was a great long coming into the end of March, beginning of April, and has really paid off for you with a 200% increase. That being said, where we're sitting right now is really elevated levels. As you can see, we've crossed well over the full target. Obviously, we've got some more upside here, potential 20% climb up to 184, but we've definitely got our head in the clouds, and we need to be very wary of what's to come moving forward. Obviously, this looks like a decent correction, pushed higher, gapped higher, hit that 160 mark, and started to pull back. I wouldn't mind looking at Square as a short trade if we can see the right setup, if we can see a decent pullback and a correction. So just one to keep an eye on in terms of a potential short-term short trade. As a company, I really like it. I really like Jack, the CEO. He's got a real visionary view to himself, to his the way he does things, and I can really see this pushing higher. So potential, just a small short corrective, and then push higher from there. Just keep an eye on it. Tesla's looking really interesting. Higher time frames, we still have that same structure in play. Interestingly, we have touched on our minimum target of 1406 given where the highs are. That being said, we haven't seen much of a move from there, and it really looks like we're looking for correction for more downside. Going into the lower time frames, the hourly, as you see, we had this push higher, and we've gone into this choppy corrective phase that potentially is going to turn into a bit of a zigzag. And that's something I would definitely want to look to get short moving forward. I still think this gap at 1,100 is a really interesting price level. That's actually our full target. And obviously down to 1,000 is an interesting level moving forward. So keep an eye on this one. Still believe Tesla short is the way to play it. Just look for that correct entry. As you can see, our full target is right next to that gap. So I still think there's some downside to come in Tesla. Tyson Foods, still looking good. We flagged this the other day for a really good trade. We had an impulse up. We went into this choppy corrective price action. Looks like an ABC correction. We then shot higher and went into this smaller degree correction. And we have bounced from there. Minimum target 70, full target around about 78. looking at the lower time frames, potentially going into a lower degree correction. We are in a dangerous level though. As you can see, this impulse correction, impulse up has gone up to the 0.786 region. So I'd like to see this turn into a bit of a corrective move. Maybe give us a nice flat, kind of on the hourly, and then get long continuation to the upside to our minimum and full targets. Keep an eye on this one. Potential trade ahead. Also, just a potential zigzag on the really lower time frames and just a shoot higher from here, given that we just came out of a really long drawn out correction. So I remain bullish, Tyson, but this pullback has been a bit concerning given where it's occurred from. Twitter's really setting up for some nice trades. If you look at the structure that it's potentially giving us, we've had a really nice move up from around about $20 up to 37. We've then gone into this drawn out correction. Given the fact that this impulse was quite choppy, we could see a really good move if this plays out from 35 up to around about 70 or around about 52 moving forward. Could be a quick move. In the meantime, there's a potential push higher from this region. I'm not going to trade this to the upside. I want this to be the confirming wave, and even this down to the C wave, this move down to be a confirming wave. Then towards the end of the month, I would like to get long Twitter in this region to trade up over $50 with a nice big strong move higher given the preceding impulse. Nice looking trade towards the end of the month. Texas Instruments, just looking at the short term, we've gone through this running flat correction. Looks really good to me for some more longs to the upside. Look for a lower degree correction on the hourly. And that would definitely be worth a trade in my book, given where we're sitting, given the structure that came before it, nice running flat. Zooming out in terms of upside targets, there's potential for this one to get a bit of heat, get some steam really. We are very close to our minimums, but we could see this push higher from where it is, 132, potentially as high as 170. So if we do see those lower degree corrections and a lower degree entry, that's definitely one worth taking, because you can get a really good risk reward out of this if you get a nice corrective structure over the next week or two. So keep an eye on Texas Instruments. Good looking trade, good looking structure beforehand on the higher degree. Looking for entry if it presents itself. And finally, Verizon. This is more of a longer term trade. If we zoom out, we can see what we're looking at here. We have pretty good looking impulse to the upside. We go into a really complex drawn out corrective phase that looks to be complete. We then have this impulse up and we've gone into a bit of a correction. It's a very strange correction, but what do we see? It does look a lot like it could become an expanding triangle. If it does, and we see this play out in the way that we're looking for it to play out, in which case we mean from where we are now, just a push higher, kind of probably above 58, maybe up towards 60, and then a bit of a pullback down towards 55. Definitely a long trade you want to be in from 55 upwards. So look for this. If it does pull through for us, then you definitely want to get long Verizon. Upside target, if we zoom out all the way, you can see the structure we're playing. Upside target, obviously around 63 is an important level, but there's potential for this to get as high as 70, potentially as high as 82, turn into a nice big running flat for us. So keep an eye on this one. Looks really interesting. Big move to the upside, big move to the downside, and then another big move to the upside to follow. So some good looking trades for Verizon in all directions. If we can start to see this expanding triangle playing out, it's perfect entry to start getting involved in that price action. So that's it. That's our long, extensive watch list for this month. Some really good looking trades that are coming fairly soon. Some others that we need to look at towards the end of the month. In but regardless, there's some good looking structures out there, some good looking trades on both the long and short side, so keep an eye on it. And yeah, keep an eye on the S&P. The S&P is doing some interesting things. I still believe we're going to see that pullback in the S&P. I still think we're going to see a pullback in the other markets. Just take a look at this 8-hour chart on the S&P. Still looks like we need to get that pullback. Heading over to the Russell 2000, still looks like we need to get that pullback, and definitely at an interesting level given where we're sitting. Looking at the Dow, also interesting levels. Still looks like we need to get that pullback, getting some MACD divergence. So potentially some risk off moving forward, and something definitely we want to keep an eye on. But once we see this complete, especially the S&P, given the running flat correction momentum, high momentum nature, definitely want to get long following the pullback. So some really good trades on the broader market if you can find an entry. It's been a real difficult trade for us trying to find an entry to the downside, but I don't see why some maybe September puts at around about the 3,000 level wouldn't pay off for you in the long run. So keep an eye on that. Cool, guys. Stay safe, keep your risk management tight, and stay nimble. We'll see you in the trading room.